Despite a rocky start, Indian equity markets have emerged as one of the best performing markets in Asia in 2023. With a rally of up to 20%, the benchmark S&P BSE Sensex and the Nifty 50 indices outpaced the MSCI Asia Pacific Index and the MSCI Emerging Markets Index, which returned up to 9% in 2023. In the process, the BSE benchmark crossed the 72,000 mark for the first time in late December, while the NSE Frontline Index came within striking distance of 22,000. The Lal Street investors, too, turned richer by around 80.5 trillion rupees last year. Going ahead, a mix of global and domestic factors will set the tone for the markets this year, the most significant of them being the general elections of 2024.
Given the state election results that we have seen, bulk of India believes that they will come with a decent majority. Of course, the proof of the pudding will be seen in May 2024. But continue to have the present government bodes quite well and will reduce the premium, risk premium as far as India is concerned.
Policy continuity, analysts said, will also augur well for India Inc., supporting its earnings growth. According to Bloomberg data, Nifty earnings are expected to grow at 14% in FY24 and at 16% for FY25. This compares with 11% earnings growth clocked in FY23. That apart, the first budget post-election would be the most important trigger for the markets on the domestic front. Beyond that, analysts expect global factors to drive the markets.
With about 50% of the top 20 nations going for national elections, we expect that the macro debate would shift from economics to politics. Second, we expect the journey to shift from inflation to that of disinflation in 2024. What we mean is, while we saw increasing inflation in early part of 2023, we will gradually see declining inflation as we go through the year 2024. Third, we expect the growth to bottom out in 2024.
That said, geopolitical developments and oil prices remain key unknowns for the markets at present. Against this backdrop, where are the Sensex and Nifty headed this year?
We remain to be positive for 2024 for Nifty with a target of 24,700. However, the journey towards 24,700 will not be linear.
The Sensex index, meanwhile, may rally all the way to 81,600 with near-term resistance at 79,800. The index's major support stays at 62,600. Thus, market mavens see India as a shining star in 2024, where any interest rate cut would provide additional boost to the market. However, they believe valuations will become an important factor in driving the outperformance. Today, on January 1, manufacturing PMI data and auto sales data for December 2023 will be on investors' radar.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.